Hey folks, CA Rachana Ranade here, and I welcome you all to another shoot and release video. It's really thrilling to shoot and release videos because it's like one take, right? I start, I finish the whole thing, and I just end it just like that. So of course, being a human being, it's possible that I may fumble on certain financial figures. So if I do so, please don't forget to check out the pinned comment for this video, wherein I will make certain rectifications if need be. Okay. So with this basic thing, first let's understand why we are making this video. Of course, I'm sure after watching the thumbnail and title, you're already aware about it. Tata Motors, this stock went down by like 8+% today. If you saw, there was a big red candle in TradingView, and there were a lot of people who were really surprised as to why did Tata Motors fall today in spite of great numbers. So please understand, whenever you're interpreting any financial results, there are two important points. Number one, you have to understand what are the actual results for this quarter or for this half year or for this entire financial year, and very important, number two, you have to check is what is the management guidance. Okay, so if you are a part of our 21 days fundamental analysis challenge, I had explained this same concept in my Invest in India community. Of course, if you want to be a part of that, again, you'll find the link in the pinned comment only, right? So moving ahead with today's topic, which is about Tata Motors, what I am going to do is I'm going to directly share my screen with whatever presentation the management has given. It's not an investor presentation yet. It's just about the actual numbers, about the quarterly results, the half yearly result, or the full yearly results, whatever they have given. So let me share my screen right away and show you, right? Okay, so here we are. First of all, we'll understand that this is a 5-pager summary of the results of Q4 FY24, right? So if you see here, fantastic results this time. Why am I saying this? You can have a look at this, by the way. This is consolidated figures. So entire financial year 24 versus the previous year. They have taken multiple key points like revenue, EBITDA percentage, EBIT percentage, PBT into bracket BEI is basically before exceptional items. Okay. And then we have PAT. This is only for Q4. This line is entirely for Q4. And if I just scroll down here, you will see this is entirely for entire financial year 24, right? Now let's understand that this is a consolidated view, agreed, but then what are these three things? These three are their key segments. Again, if you are a pro investor member, I had discussed about this stock in absolute detail in December 2023, wherein I had explained why JLR as a segment is really important for this company. Almost 70% of the company's revenue comes from JLR, which is Jaguar Land Rover. Okay, then comes the CV, that is Tata Commercial Vehicle, and then comes the PV, which is passenger vehicles, in which we talk about EVs, right? So I hope you have understood. Tata Motors is equal to what? Is equal to JLR plus commercial vehicles plus PV, passenger vehicles, which includes the EV segment, right? Now, first things first, we have to understand whether revenue was increasing or not, whether EBIT or EBITDA was increasing or not, PAT was increasing or not. What about the cash flows? Has the management actually declared some dividend or not? All these points let's understand quickly, right? So if I were to just show you some key points, I've highlighted some things so that it will be easier and faster. So Tata Motors consolidated record revenues 437.9k, so 4,37,000 crores. 4 lakh crores se bhi zyada hai. Okay, this is like all-time high record revenues, all-time high EBITDA, again 62,800 crores roughly, highest ever profit before tax, before exceptional items of 28,900 crores, and net profit also record net profit of 31,800 crores. और क्या चाहिए? Okay, record revenues, record EBITDA, record PBT, record net profit, record PAT. Everything is at record high. Did they declare dividend? Yes, 2 dividends declared. One is a final dividend of 3 rupees per share, and additionally a special dividend of 3 rupees per share, right? Now we also have to understand about their cash flow. So I'm just going to go down a little bit and show you about their cash flow. So here, if you see here, free cash flows for the year was highest ever. Again, this is also highest ever at 26,900. So 26,000 crores roughly, just to round off the figure, right? And if you compare this with the previous year, it was barely 7,800 crores. So from 7,800 crores as a free cash flow in the previous year to 26,900 crores in the current year, that's like a huge jump in free cash flow. Now, if this be so, if they have more and more free cash flows, are they ideally going to reduce the debt? Answer is obviously yes. So I've also marked a point about their debt reduction, which is like very, very important. Exactly, that's where they talk about. They are saying that the company expects to be net debt zero during financial year 2025. And in fact, if you read through the whole document, you will also understand that at India level, They have already become net debt free. So fantastic. Then the big problem, this we have understood at the whole level, at the company level per se, right? Now, company level, everything is at record high. Agreed. What about each and every segment? First, let's understand about JLR, right? Now, if you see here, JLR also record Q4 revenues and FY24 revenue. PBT was at amazing, almost 661 million pounds, by the way. And they are mentioning that this is like the highest since financial year 2015. So, have they gotten back on track? Answer is again yes. Now, EBIT margin in Q4 is 9.2% and FY24 whole year margin is 8.5%. Again, if you are a pro investor member, when we had discussed about this stock in absolute detail, I had told you that their guidance, EBIT guidance, which earlier was around 6%, they had revised it to 8%. And even though they had revised to 8%, entire FY24 stands at 8.5%. And last quarter is at 9.2%. Crazy EBIT margin for only JLR I'm talking about, right? Free cash flow, again, record high free cash flow at 2.3 billion pounds for financial year 24. Net debt reduced to 0.7 billion. Fantastic. Only one black spot in the whole JLR space is the order book, which is around 1,33,000 vehicles as at the end of FY24. Earlier, this stood at around 1,68,000 units. Okay, so in Marathi we say स्वच्छ पांढऱ्या भिंतीवरती एक काळा ठिपका. Even if you did not understand, it's like one black spot in the whole positive space, right? So all in all, fantastic. Are they also launching new cars in the JLR category? Answer is yes. Okay, so moving ahead, what does the management say? For JLR, they say we expect EBIT margins in FY20. We'll talk about looking ahead at the end. Okay, first we'll understand about the commercial vehicle space now. Okay, commercial vehicle space also everything. Revenue is up, EBITDA is up, EBIT up. Everything is fantastic. Again, one point about commercial vehicle was that their EBIT, specifically I wanted to mention this point, their EBIT is at 8.2%. Not bad at all. And this is up by what? This is up by 300 basis points. So previous year EBIT for commercial vehicles was 5.2%. From that it has gone up to 8.2%. So is this also a very good number? Answer is obviously yes. Okay, so commercial vehicles also doing good. Now, one point was that in the wholesale commercial vehicle space, the volumes were 1,04,600 units, lower 7% year on year on account of what? So basically, volume-wise sales in commercial vehicles was down lower by 7%. Have they also given the reason why? Yes, they say that it was on account of increased pre-buy in Q4 FY23 due to BS6 phase 2 transition. So you can imagine something like this, that in this financial year, that is 23-24, they wanted to go ahead with BS6 phase 2 transition. They have already completed it, by the way. So what they did in the previous, so Q4 FY23, what they did was, they said we want to finish off the old stock. When they wanted to finish off the old stock, I'm sure they might have given some good discounts, and that is the reason why in the previous year's last quarter, the sales were high. And in comparison to those sales, this year's sales are a little bit less. So I hope this point is also clear. Again, looking ahead, we are going to talk about at the end. And with that, let's move on with the last segment, which is about the EV or the PV, passenger vehicle category. So I'm just going to take here again, revenue up by 19.3% year on year. EBIT, so EBITDA was comparatively flat year on year. EBIT is still up 150 basis points. So basically 1.5% up. So you can imagine this would have been 1.4% EBIT in the previous year, which has gone up to 2.9% now. Okay, so this is good. Vahan registration market share has increased to 13.9. Previous year it was 13.4. Again, if I'm talking about EV ka share, currently it's at 73.1%. Has gone down a little bit lower. In the first half of the financial year 24, it was 73.4. From 73.4, it has come down to 73.1. But still, people, 73.1% market share in itself is a huge market share. All in all, if you were to ask me, be it at the entire company level or at JLR level or at CV level or at PV level, numbers are not bad at all. In fact, they are great. Now, where is the problem? Problem is with the outlook that they have given. Now we are just going to read the outlook part. Okay, looking ahead, what does the management say? We remain cautiously optimistic. They are not saying we are optimistic. They are saying we are cautiously optimistic on what? Over the full year they are mentioning, but they expect H1 to be relatively weaker. This is where the main problem started. They have very clearly mentioned that we feel that the coming first half, that is from April to September, they are saying that this could be relatively weaker. But in spite of this, they are saying that the premium luxury segment demand is likely to remain resilient despite emerging concerns on overall demand. The premium luxury segment is going to do good if JLR also performs well in this, which is in this category. In that case, of course, that is the top contributor for the revenue. If that performs well, again, will be good, right? But the most important point is that, okay, H1 will be relatively weaker, but what is the last line? Despite this, we are confident of delivering a strong performance in financial year 25. So in short, what have they mentioned is that in the first half, it may be a little bit jittery, but overall, whole year, it's going to be, they're saying we are confident of delivering a strong performance. So I don't see what is the problematic area here, okay? We did discuss about the cash flows as well. Even for JLR, they are saying we expect margins in FY25 to be around the similar level of FY24, but net debt zero by FY25. So again, JLR, not that bad. For CV, they are saying we remain cautiously optimistic. So again, they have not given a very high hope category scenario in CV. Why? They are saying that we are keeping a close watch on geopolitical developments, interest rates, fuel prices, inflation. And finally, for the passenger vehicle or the EV vehicle, they are saying we expect demand for passenger cars to remain strong. And they are saying that, yes, however, we are saying that we are coupling it up with certain factors like election, heat wave, that may keep the growth rate moderate. Okay, all in all, what is the conclusion now? Conclusion is that, if you ask me, numbers are fantastic. No problem at all. In fact, I'm really happy with their financial numbers. Only thing is that the management has given a weaker outlook for the first half. So all those who are ultra short-term people, for them, this is a concern 100%, yes. For those who are long-term investors, who look at any stock from a minimum 1 year perspective. In fact, I will say that whenever stock falls, it's going to be like a discount. It's going to be like flash sale available in the stock market in certain stocks like this. So I hope you know what is to be done in flash sale, in deep discounts. Keep on a watch. If you feel that this is a good level, all of you, those who have done technical analysis course, which is available on my website, I have taught pivot levels, I have taught Fibonacci levels, I have taught 200 DEMA, 50 DEMA, that gives you confidence on which could be a good support level for the stock. So whenever you feel that fundamentally strong stocks come at good support levels, this is a thumb rule that I always use. Fundamentally strong stocks coming at support levels, it is a buy. And whenever I buy such stocks, any stock which is fundamentally strong stock at good level, I would still not buy at one shot. I would go either 1/3, 1/3, 1/3, or 1/5, 1/5, 1/5, 1/5, and 1/5. That gives you a good averaging, so that whenever you are bullish on any stock, it gives you a comparatively good return in a longer run. Of course, I'm telling you not from Tata Motors perspective only, any fundamentally strong stock which you feel can be thought of from this angle. As always, this is not a stock recommendation. I'm just sharing my short summary on the Q4 results that Tata Motors came up with, because I received a lot of question marks with the Q4 update and stock falling by 8%. So I thought of doing this as a quick shoot and release video. I hope you enjoyed this short summary of Q4 results. If you did, don't forget to share this with your friends. Don't forget to smash the like button. Till then, take care. Jai Hind and bye-bye.